Chapter 6.3, Completing a Worksheet. Well, we're now at the point where we have recorded all the trial balances in the appropriate columns. We've taken care of any adjustments that happened during the fiscal period. Now we are at the point where we get to complete the worksheet. And completing the worksheet is actually pretty simple. The two things that you need to know is you need to know the difference between a balance sheet and an income statement. A balance sheet has assets, liabilities, and owner's equity. An income statement has revenue, expenses. Two simple equations that you've heard from the beginning of this class, but you need to make sure that you have it. So let's take a look. Well, we have this Roseville Rental, our continued worksheet that we've continued to work with. With Roseville Rental, one of the things that we want to do is now we want to prepare the income statement and balance sheet columns. Now, if you remember when we started this whole process on our trial balance, we recorded them by numerical numbers. So our 100s were assets, our 200s were liabilities, our 300s were owner's equity. Well, one way to put it this way, and remember balance sheet is 1, 2, 3. So we're going to take those numbers that are in the trial balance and we are going to turn it and we're going to put them in the balance sheet columns because our assets, liabilities, and owner's equity are what go into the balance sheet column. So I'm going to take my trial balance of debit cash for $12,430. I'm going to put it in the balance sheet, debit $12,430. And all I'm doing is I'm transferring over. Be careful when you transfer it. Be careful that if it has a trial balance of a debit, make sure that it has the balance sheet of a debit. And vice versa with the credit as well. So $150 for petty cash, debit, $745 accounts receivable for Leslie Naples, debit. Now if you look here, we got to supplies. We have $580. And then we have an adjustment of $280. Now, remember that adjustment tells us what did we use this fiscal period. So if we have a debit of $580 and a credit of $280, they're different. Debits and credits are different. Therefore, we are going to find the difference. In other words, we're going to subtract. And since the debit is the larger of the two numbers, it's going to be a debit balance of 300. So 580 minus 280 is going to be 300. You really can't have a credit balance of supplies for 300. It's impossible to have negative supplies. If you can figure out a way, then you know something really special. Same thing with prepaid insurance, debit balance of 800, credit adjustment of 200. We used 200, so since they're different, we're going to find the difference, and therefore we're going to subtract 800 minus 200, and that gives us 600, debit balance, because the 800 is larger than the 200. Accounts payable, it has a credit balance of 415, so we're going to enter it there. Capital has a credit balance of 13,476. Drawing has a debit normal balance of 450. And income summary has nothing. So we have our balance sheet accounts now. Now what we need to do is we're going to move over to our income statement account, because if you noticed, we used our 1, 2, 3 accounts, or our assets, liabilities, owner's equity. Now for income statement, we need to use our 4, 5 accounts, or our revenue and expenses. Well, our first revenue account is sales, and that is a credit normal balance of $22.74, and I'm just moving that over. Advertising expense has a debit balance of $360. Now if you look at insurance expense, it doesn't have a trial balance, but it has a debit adjustment of $200. Not a problem. We're going to just take that and move that to a debit balance in the income statement column. Same thing with our miscellaneous expense and supplies expense. 0 plus a debit balance is going to give me a debit balance of $280. And then my utilities expense of $436. Now, what I need to do now is I'm going to take and I'm going to add up these columns. So I'm going to draw my single line, which you can't see too well. I get $14.90 for my debit of my income statement column. I get $22.74 for my credit on my income statement columns. Now, what that pretty much represents in simpleton terms is my credit is my revenue and my debit is my expenses. So basically, this fiscal period, I brought in $22.74 in revenue. I only spent $14.90, so I'm doing pretty good. I brought in more than I spent. Any way you equate that, that's going to be a good thing in business. Now our balance sheet, we're going to take it, we're going to add them up, and we have our $14,675 for a debit balance, and then our credit is going to be $13,891.
Now, you might be sitting there going, okay, wait a second, what's going on? These don't balance. These need to balance. They're not supposed to balance, but they will eventually balance. And the reason I say that is because what we need to do is we need to figure out, did we have net income or do we have net loss? Did we make money or did we lose money? So the easiest way to do it, we start with our income statement column. If you notice, I have $14.90 and $22.74. I'm going to take the larger of the two numbers. I'm going to enter it 2 lines below where the trial balance is, and then I'm going to then also move it over to the left. Now what I'm going to do is I'm going to take the difference of my revenue minus my expenses, and I'm going to put the difference in the debit column. In this case, the difference between the $22.74 and the $14.90 is $7.84. On the balance sheet side, I'm going to do the same thing. I'm going to $14,675 and $13,891. Well, which one's larger? The $14,675. I'm going to drop that down 2 cells below and then over as well. And then I'm going to calculate the difference between the $14,675 and the $891. And I should get $7.84. Now, if you notice, my debits and credits do equal. I am in balance here. It's also important to know as you read this on that balance sheet column there, if we just look at that, we have a credit balance of $784. A credit balance of $784, if you remember back to owner's equity accounts, owner's equity accounts have a normal balance of a credit. Therefore, if we credit it, we have increased our worth. Well, in this case, as we talked about in the income statement column, we actually did increase our worth, and so that should be an indicator to you that we have what's called net income. So in this case, Roseville Rental didn't do too bad in this fiscal period, had a net income of $784, so not too bad. It's definitely in the black, and it's definitely positive. Let's just take a look here and what happens if you have a net loss and what a net loss might look like. If you look over in the lower right-hand corner, you'll see that we had, and basically the way to read it is this, is they had $985 in expenses and only $900 in revenue. Well, in this case, that's going to be an 85 loss. Well, how do we know it's a loss? Well, let's go back to those balance sheet columns, and a debit to the owner's equity account. Just the easiest way to remember, the debit to the owner's equity account is considered a decrease in owner's worth. In other words, we are taking money out of the company. Therefore, that $85 sits there. Don't get too hung up on why is it an 85 in the income statement column. We'll actually explain that later when we go to close these accounts and we get into the income summary accounts. That's how we'll close those in the work. What you want to look at to know whether it's net income or net loss is going to be the balance sheet columns. Entry in the credit side of the balance sheet column is going to be net income. An entry at the end of the balance sheet column as debit's going to be net loss. Hope this helps, and I always hope that you have nothing but net incomes.